Okay, welcome to part 4 of Sonoma County's 12-part Insurance Requirements for Contracts training program. In this part, we are going to discuss waiver procedures and insurance-exempt contracts, contracts that don't require insurance coverage. So first we're going to start off with waivers. So what is a waiver of insurance? Well, essentially, when we grant a waiver of insurance requirement, we are giving the party with whom we're contracting permission to not comply with one or more of the requirements that are imposed on them. It's basically what that is. Now, you might say, why would we issue waivers? What's the rationale for this? Well, sometimes the other party just can't get it. Some insurers will say, we won't issue that coverage or that endorsement. And we have to look at the question, can we really require somebody to change their whole insurance program in order to contract with the County of Sonoma? Sometimes, and by the way, we would only waive something if the risk is acceptable. You know, we have to balance out the risk versus what happens if we waive it. Sometimes the person or organization just can't afford the coverage. And the risk is low. Sometimes the person or organization has the coverage, but they've purchased lower limits than what we require, and we decide the risk is low enough that we're willing to accept it and go forward. Sometimes we have a sole source supplier. This is where this party is the only party that can do exactly what we want or need to get done. And at that point, we pretty well have to accept the risk or we won't get done what we need to do. There was one contract that came up a while back where we needed particular software to comply with some kind of federal regulations to provide data for these regulations. And apparently there was only one software provider of this. And they looked at our insurance requirements and they said, we won't do C and we won't do D and we won't do E. We had to issue a waiver. Otherwise, we could not be compliant. So basically, we have to carry out our functions, and sometimes it involves assuming risk. Now, we have two kinds of waivers. They're called department waivers and risk management waivers. We're going to talk about the department waivers first. Department waivers are basically do-it-yourself. You don't need to involve risk management. It's as if we've approved these kinds of waivers in advance for you. You don't need a risk management signature. And let me give you an example. One of our requirements is always an AM Best rating. AM Best is a financial service that rates the financial wherewithal of insurance companies. So we don't want them to have their insurance with a C-rated company that's going to be out of business in 6 months. We can't ask every contractor to change their whole insurance program because the AM Best rating dropped from A to A minus. So the requirement is always there, but you are allowed to issue a waiver of that requirement without risk management approval. We actually did that. Has any of you ever worked with any of the not-for-profits that are insured with the Nonprofit Alliance? Yeah. Okay. About 3 years ago, the Nonprofits Alliance, that's an insurer, their rating dropped below our standard. And we had so many contracts with nonprofits that were insured with them. Waivers were a dime a dozen. They're coming out. Finally, we said, no. This is something that you can do at the department level. Okay, now, the key to department waivers is it has to be an approved department waiver. How do you know if it's approved? Well, remember the template assistance that we talked about. When you click on the help text for something, so if they're not compliant in one of the aspects, if there's a help text for that in the template assistant, it will say department waiver. So this is an example in every template, the AM Best rating, when you open up the help text, you get an explanation and it indicates department waiver. No guessing. If it ain't there, there's no department waiver. Lori, you had a question. Yes, Lori says there's no waiver on the AM Best for capital projects. Actually, there's no waiver for nothing on capital projects. And in template 1 or 2 or 25, the construction templates, that language is not, and by the way, it is template specific. There are some templates for which we might waive auto insurance coverage and other templates for which we would not. And nothing is waived in publicly bid large construction projects. So how do you get a department waiver? Well, you click on the waiver form and you will get a fillable PDF. Okay, at the top of the waiver form is kind of the general information section, and this is fillable right on the screen. You fill that out, and then side 1 is the department waiver below that information box. You check off which department waiver you want to use, and I'll give you a hint. If it ain't on the side 1, then there's no department waiver approval in the template assistant. We were pretty careful about only putting things on the department waiver side that are in fact agreed to as department waivers in the template assistant. So if you don't find it there, that's a pretty good hint that it's not acceptable for a department waiver. So then, in department waivers, you check off the item that you're going to waive as a department waiver. By the way, you give it an exhibit number or letter. That was on the previous slide. And then you have it signed by your department head or a designee of your department head. You don't need to submit it to risk management at all. Now, the other kind of waiver is the risk management waiver, and that's the one that you may still get a waiver, but it is subject to approval by risk management and requires a risk management signature. So you download the same waiver form and you fill out the same heading box on page 1, but then you go down to page 2 and you check off what kind of waiver you want and give us a reason. And please note up top, see where the big arrow is up on the top there? Submit to risk with the agreement, including the scope of work. We can't evaluate the amount of risk that we would be accepting if we waive any or all of the insurance requirements unless we know what the contract says and what the scope of work is. If you send it in without, you're just going to delay it because we're going to send you back an email asking you for it, and then it's going to come in and it's going to be at the bottom of the pile again. So send us we like to be playing with a full deck. Not that risk people always do, but we like to be playing with a full deck. I will tell you this, We try to accommodate because we know that you guys have to get your work done. It's only when we feel that the risk is way unacceptable that we will decline one of these. Now, occasionally, you need a waiver of two things, one of which qualifies as a department waiver, and the other is a risk management waiver. You don't need to do two waiver requests. Fill out side 1, fill out side 2, and send the whole thing in with the agreement and the scope of work. And if side 2 is acceptable, risk management will sign both sides for you. You don't need to do the waiver process twice. If you've missed any of these instructions, our insurance website has all of these instructions for you, so you can always double check the instructions. Now, what's more recent is insurance exempt contracts. Contracts, oh, look, everybody, that's the way we smile, right? Everybody's smiling. These are contracts where risk management has determined that the risk is low enough that we can go ahead with the contract without insurance requirements. Our modus operandi in risk management is balance. We want to balance the amount of work and resources necessary for you and for us to do our jobs versus the amount of financial risk of the county. And we have determined that there are a series of contracts that pose relatively low risk to the county and involve lots of your time and lots of our time. And every time you ask for a waiver on those contracts, we approve it. So we finally decided, let's concentrate our resources on the high-risk agreements and not on these low-risk agreements. So we now have insurance-exempt contracts. I'd love to give you an example. Every time I think about this, I just laugh. This one came from the fairgrounds. And every year at fair time, they have horse races. Have you ever seen the horse races at the fair? Okay. And they hire a guy to call, it's always been a guy as far as I know. They hire a guy to call the race, Number 1's coming around the track, number 2's, you know how that sounds, right? I don't know why they hire him, you never understand him anyway, he's talking so fast, but that's okay. They pay the guy $250 to sit up in the booth and call the race, and he's there for an afternoon. So they give him a consultant contract. They require workers' comp, but he doesn't have any employees, so he doesn't need it. General liability, the whole shooting match there. Well, this guy doesn't have insurance. He's not a professional. He doesn't have insurance. So every year, they'd send a copy of the contract and a waiver request into risk management. And so we'd go ahead and print the waiver request and sign it and scan it and send it back. All of this for $250 MC contract. And so we finally come to the conclusion that that's not a good use of your time or ours. Okay, now, in order to qualify for an exemption, there are 4 criteria. And between them, it's and, not or. They have to a contract has to satisfy each of the 4 items. First, the annual amount of the agreement has to be under $100,000. It must have low auto exposure, no transportation of people or property, nor can it be a contract that's go from place to place contract. For example, we once had a contract where we contracted with somebody to provide some home visitation services to people who really couldn't get out. And so the party was taking their car and going to house A and spending an hour, and then house B and house C. That's not low auto risk. So it's not that kind of a contract that would qualify as low auto risk. Errors and omissions or professional liability insurance is not required. And the scope of work must fit the list of contract exempt categories that are found on our web page. Some examples, the full list is on the web page. Some examples are DJs, announcers, MCs, meeting facilitators, certain funding or grant agreements that are made to public agencies, to other public entities, not to not-for-profits, but to other public entities. The full list is on our contract insurance webpage. The procedure, if you have a contract that meets the 4 criteria, here's what you do. You click on the navigation link to exempt contracts. Then you determine eligibility based on the 4 categories of criteria, including exactly what's written there, and Julie, I don't remember. No guessing. It's either there or it's not there. If you're not sure, send a help request to risk management, to ask, does this qualify? Why does K limit the training on county premises? And I think our concern was that if it's somewhere else, we may have contracted with the owner of that property, and there may be certain liability requirements. It's not to say that we would not waive it, but it's just not automatically exempt. Okay, no guessing. If you're not sure, send in a help request. If the contract is eligible for exemption, you're going to go into the body of your contract, the part that says insurance that had that fancy incorporation language, insurance as required by exhibit so-and-so, which is incorporated herein and attached here, all that legal language that we talked about before. And you're going to cross that out or strike that. And what you're going to put in is not required per risk management exemption. These instructions are on our contract insurance web page. Somebody asked about this earlier, perhaps at break. Do not delete the indemnification language. Of course, if they don't have insurance, they may not be able to afford indemnification, but you don't delete it. It stays in the body of the contract. Okay, this concludes part 4 of Sonoma County's insurance training program.